been an ugly year so far for stock markets. Major indices all having their worst start of the year in several decades. The good news, stocks usually go back up eventually. That's where we find Sozzi stake. How eventually, Soz?
Well, I think just doing the math here, Julie, we all should still be alive, so that's good. And I realized I've probably been a little too downbeat on my takes lately. So here's a dose of morning optimism. This comes via a lot of data crunching by a friend of the show, Keith Lerner, over at Truist. Two stats. First, he's noting the S&P 500 has been higher 3 years later in 8 out of 9 cases in which the index has fallen 20% or more from an all-time high going back to 1957. He also notes stocks have sharply regained ground a year after falling 20% or more from a high. So a year after, that increase has been about 15% 7 times. The bottom line is here, and to your point, Julie, yes, and this also happens to be my take, over time, and Miles Alden will like this one very much, stocks do tend to go higher, and that is me being happy Soz with my Ray-Bans on. You know, over time, these extremes that we live in, like right now, high periods of inflation, rising interest rates, over time these things even out or just flatten out and ultimately serve as a once those things do even out, serve as a decent backdrop for stock prices over time.
The old adage, it's not timing the market, it's time in the market. But I mean, at the same time, if you're a person that's looking to retire right now too, you got to wonder, how that's impacting some people too in their retirement, being able to
just live an extra 8 years, Brad. Just live an extra 8 years. That's all you got to do.
That's all right. I'll call up Tony Stark, get that arc reactor flowing. Saz, appreciate it here on the day.